Welcome back. My name is Arya and I don't waste your time, so let's get straight into it. Ladies and gentlemen, in today's video, we're going to be doing a two-part deep dive into both AMD and Meta. And so the first part of this video, the AMD portion, is going to be here publicly on YouTube. And if you'd like to catch the other half of the video, the Meta deep dive, it's going to be here in the exclusive videos section of the Discord server. In order for you to gain access to this, you guys could check out the Patreon, which is price locked at $3 forever. Link in the description for that. With that being said, AMD, which doesn't really need too big of an introduction. I'm sure many of you guys are kind of familiar with the business. They make a variety of different they design a variety of different semiconductors. Historically, they've been bigger in the CPU market, so the core processing unit for gaming and just computers in general and that type of stuff. They've competed with Intel for many decades, which Intel, of course, was the dominant business for, I don't know, call it from the 1970s to the late 2000s. They were probably the CPU company. But then over time, Intel has kind of lost its moat, especially when we made the switch over to mobile. And so historically, they've been a very strong desktop and laptop business, but they haven't really navigated their way through the mobile era too well. And then one key thing to note with AMD is historically, they actually owned their own factories. So they would actually manufacture the chips. After the 2008 crash, they decided to divest Global Foundries, which was just their manufacturing part of the business. And so they fully split it off. And then in 2012 was when they fully divested the last of their stake. Global Foundries is a public business as it stands today. But yeah, in 2009, AMD made the transition, and now they're fully a design business. So they just simply design the GPUs and the CPUs and that type of stuff, and they just hire other, for example, TSMC or Global Foundries or whoever to actually make and manufacture the chips for them. So they fully outsource the manufacturing. Now, with that being said, the main component that we should kind of be looking at with AMD is the qualitative aspect of this business. At least that's what I care about. But before we do that, why should we even care about this business? And so in order to do that, I'm going to go over to finchat.io, which is the best stock research platform in the world. And so we're simply going to type in AMD, and it immediately brings up the overview on AMD. We're not going to pay attention to too much information here. The main thing I'm going to pull up, and this has been a key component of the sort of chatter online about AMD, is the fact that it trades at a very cheap valuation, particularly when we compare it to something like Nvidia. So if you pull up the forward PE of, it looks quite laughable with the massive, oh my god, 17,000 PE. That's just because they had basically no profits, right? But if we zoom in a little bit, just to the 2018 until now period, you'll see that this stock had bottomed at roughly 18 times forward earnings, and so we're not too far off in terms of forward multiple. We're roughly there. Currently, the stock, as of this recording, trades at around 23 times forward earnings. If we, for example, toggle on, let's do forward price to free cash flow as well, just so we get a sort of idea as to how this company trades. And then again, I'm going to toggle on the minimum line here. You'll see that, again, in the 2022 period, it bottomed at roughly 19 times price to free cash flow. It now trades pretty close to that multiple, right? So it's definitely come down in multiple, especially off of the recent, 50 times. I even see as high as 80 times free cash flow that it was just trading at. And so this cheap multiple is really what's, in my opinion, attracting a lot of investors. Of course, you do also have the mix of it does have pretty fast growth. I definitely wouldn't say it has the fastest growth rate, 14% top line growth. That is, I'm blocking it with the camera. But yeah, 14% top line growth on a trailing 12-month basis. Again, it's definitely not growth rates we saw back in the 2021 period. And actually, a better way to demonstrate this to you guys is over on the charting tab. And if we just simply bring back the total revenues figure, I'm going to click on percentage change. And so yeah, the same sort of thing that we just saw a second ago. Definitely not the same sort of growth rate that we saw in the 2021-2022 period, but it is also re-accelerating from the trough in 2023. Right? So it's definitely improving fundamentals, accelerating revenue growth. So that definitely creates a decent setup going into this year and the year after that. This is a company that's trading near its lowest valuation, but at the same time, the fundamentals are definitely improving. And so with that being said, of course, one side of the equation is, the numbers, the fundamentals, the analysis on that sort of thing, the direction of those metrics and key performance indicators and that type of stuff. The other side of the equation is the qualitative side. Why does this business have accelerating revenues, and is that sustainable into the future? in essence, the thing we're trying to answer here is that to what degree does this business have a competitive advantage? How wide is the moat of this business? And so in order to do that, we're going to look at the Morningstar report, which I get through my brokerage, IBKR. And so over here in the economic moat section of things, they talk a lot about a lot of different things, and they talk about, the x86 architecture, which has historically been the dominant architecture for CPUs over the past handful of decades. So it was literally just AMD with like a 10% market share and Intel with a 90% market share for that, which is funny because that's actually the GPU market currently is kind of, in a similar sort of market share dynamic where Nvidia's the 90% and AMD's the 10%, but I digress, just a coincidence. So they kind of talk about the historical of that. But then I think really the biggest takeaway from this entire section from the Morningstar report is here where they say, looking ahead, they think that AMD's graphics processing unit or GPU expertise is becoming increasingly valuable with the AI revolution and that type of stuff. GPUs are very obviously the dominant way to run these AI workloads because of the way they kind of parallel process the workload or whatever it is. And then, of course, they do make mention Nvidia has a clear lead in GPU hardware, has captured the majority of AI training workloads today, and also it has spent more than a decade developing the CUDA software, and the CUDA software is just like sort of the operating system of how these developers train the AI models and that type of stuff. Totally makes sense, right? So NVIDIA's the big bad wolf, very dominant. And of course, AMD is going to have a pretty hard time at taking market share away. Definitely not discounting that. But the opportunity with AMD, at least with AI and data center revenues and that type of stuff, it lies in that niche segment of the market where they want a second vendor, for negotiation power to kind of build redundancy in some cases, right? Or just they're more focused on cost than efficiency or just having the better product, right? And so again, the Morningstar report, they mentioned this here. They say, that said, since NVIDIA and CUDA are clearly dominant in GPUs and AI today, we think leading cloud vendors will continue to seek second sources for AI and have the necessary incentives to port AI models from NVIDIA to other vendors, at least enough to keep NVIDIA honest as a vendor. In-house chip development by hyperscalers will continue, but partnerships with AMD may emerge as well, assuming AMD can improve upon its software chops to allow new customers to use AMD's GPU for AI training, right? So kind of talk about the hyperscalers, so your Microsoft, I would include Meta in there as well. Microsoft, Meta, Google, Amazon, they are making their own inference chips and training chips, but at the same time, like they are cloud businesses, so they have like end customers. So some end customers may prefer, the proprietary Amazon chip that they made. Some customers may want the AMD chip. Some customers may want the Nvidia chip, right? So like it's not really up to Amazon to decide whether or not to just offer AMD or just offer Nvidia. They're going to offer everything, and it's up to their customers to eventually pick which of these chips they want to run their workloads on, right? And then they talk a little bit about the gaming moat and that type of stuff. But other than that, really the moat comes from just technological expertise, which is, me personally, it's kind of hard to gauge how technologically they are in lead. This kind of ties into the same thing why I never bought Nvidia to begin with. It's so obscure and difficult for me to understand just how much better they are than the competition or where they stand in terms of AMD versus an Nvidia chip, right? And so to kind of help me out with that, again, going back over to FinChat, we have a Copilot feature on here. And actually, I did this a while ago, so I'm going to have to search for it. But yeah, I asked the key differences between AMD versus NVIDIA, and this is sort of the Chat GPT for finance, right? So this was specifically trained on financials data. It has all the history of the transcripts, the earnings call, literally everything. And recently, a web search option was added, so it now can look to the web and various different sources in order to gather even more information. And so I asked it exactly that, right? So I asked, what's the difference between AMD and NVIDIA's chips? It gave me some financials information, which we don't really care about too much at the moment. So I followed up with what are the key differences of AMD and NVIDIA's chips, and it gave me a whole bunch of stuff, right? So we're not going to read through all of this, but I think the summary here is probably a great description of their differences. So it says, AMD focuses on delivering high performance and energy efficiency across a range of applications, including enterprise, cloud, AI workloads. Their chips are known for setting strong performance records and offering significant total cost of ownership advantages. That's what TCO stands for. And then it says with NVIDIA, they emphasize high inference performance and efficiency, particularly in cloud, particularly in AI and machine learning applications, their architectures such as the Hopper and Blackwell are designed to deliver substantial performance improvements and cost reductions. And this is probably the key to all of this. They're both leaders in their respective areas. AMD focuses on a broad range of applications. Nvidia excels in AI and high performance computing. So AMD's trying to sell you a lot of different products and be good at a lot of different products and applications. But then Nvidia is really honed in on specifically being very good at AI and high performance computing. And that's where they really, really excel at. That seems to be where the market is going. And, you know, these hyperscalers are spending billions, or actually hundreds of billions of dollars specifically on Nvidia's chips, right? Because that's where the bulk of the market demand is. So it's okay that, AMD has a lot of different products and there's going to be use cases for that. But the majority of demand is going to be in that high performance compute, right? And so when we go all the way back to, the fundamentals of this business and we start to kind of look at these numbers and, the 20 whatever forward PE that it's trading at, like, yeah, it's cheap. It's probably going to grow a lot. But at the same time, like, you got to consider that, this is a pretty cyclical business. And actually, you know what? We're going to go back to the charting tab to better demonstrate this. Like, you start to look at these revenues, especially on a, 20-year scale. And I'm even going to bring this back, right? A little bit more. Like, you could see that even post 2009 when they divested the Global Foundries business, like, it was still quite cyclical. You go from a peak of like, $6.5 billion in revenues all the way down to $4 billion in revenues. And then within a handful of years, it's back up and that type of stuff, right? Like, it's a very cyclical business. And for the past 3 years, the revenues have been flat. Even if we assume that, for example, the analyst estimates kind of work out over the next couple of years, you could see that like there's a huge boost in revenues over the next handful of years. But like when it comes down to it, it's going to be really, really difficult to actually get a gist of like how predictable these revenues are, even with these analyst estimates, right? Like they're exactly just that. You go over to the estimates tab to take a look at this. For example, the lowest range analyst is projecting about 30 billion in revenues. The highest one is 35 billion in revenues. That's a pretty significant swing just for the next year. Like that's about a 15% swing in terms of the low end and the high end, the most bearish analyst on Wall Street and the most optimistic analyst on Wall Street. And then it even gets worse when you look out like 2-3 years, right? Like for example, for 2027, they're projected to do on the low end, get this, 33 billion in revenue, on the high end, 50 billion in revenue. So they're expected to, let's go back to the charting, right? Currently they're doing 25, so they're expected to moderately grow their revenues over the next, call it 3 years, or quite literally double their revenues. That is a massive, massive range of possibilities. And me personally, the type of investment I'm trying to make, that is too much uncertainty for me. I can't really get a good grasp of how this product is in the marketplace, the actual market demand for it. And then at the same time, like, even let's get past the product side of things, and let's say this is a product that definitely has the demand for it, there's still a massive range of possibilities in terms of like, okay, it's a successful product, they're going to sell a lot of it, but like to what extent, right? So there's just so much uncertainty for me personally to like buy into a name like this. Now, with that being said, if you are an expert on semiconductors, you understand the product differentiation, maybe you've even done just more homework than me, right? Like maybe you followed this business much longer than me and you understand it better, right? More power to you if you're able to make that purchase decision. Me personally, even though I think the valuation is very cheap, I mean, especially if you look on like a forward PE basis, for the amount of growth that this business is probably going to have, this is absolutely ridiculous. 23 forward PE for like realistically revenue growth of over 20%, EPS growth of like 40%. Like it looks cheap on the surface. It's so hard to tell like which part of the cycle we might be in, or like how much of those estimates are going to be coming into fruition, right? Like it's just such an uncertain business, and that just doesn't sit right with me. But anyways, I'm probably just going to sit tight. I'm happy with the investments I have at the moment, which by the way, I publicly track over at the top of my Twitter page. And then on top of that, this beautiful software that we've been using all video long, you could try it out completely for free with no card details required. You get a 2-week free trial automatically applied to your account once you sign up using the link in the description down below. And also a reminder, if you want to catch the other part of this video, the meta deep dive, you could do so over on the Discord. Again, the link for that will be in the description down below. Thank you very much for watching and have a great day.